Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. All right, buddy. Welcome back for another episode of my podcast. The market's rather quiet this week. I haven't got much, ups and downs really. It's up 100 points here and down 200, 300 odd points, and then suddenly recover. But I think on Friday those things have just suddenly gone up quite a bit, and that I think might have something to do with the 10 years, U.S. 10 years and 30 years Treasury yields seems to have come down a notch. So from last week, from about 1.7 for 10 years and around 2.45 for 30 years, it came down to for the 10 years to 1.68, 1.9, 1.69 area, and then for the 30 years it's got down to like 2.3839 area. So it came down a bit, and it seems to like that might have something to do with the Dow Jones over there. Suddenly gone on Friday, but we just have to wait and see. But at least the pressure is up. But mostly, I think this week, financially, it's just the yields, and then the stock market seems to be continuing defying the consensus. The Main Street is. We're still trying to recover, and Wall Street basically gone up and up forever. It just so much we go on with this. It just reminiscence of what's happening back 2000, 2003. Something we'll have to give. The market sooner or later we have to realize that the Main Street is not making money, and then Wall Street keep going up, just like back in old days. Internet company, any company that suddenly have a web presence, have a .com in the bag, or .co.uk suddenly gone up. And even though they have to spend a lot of money on advertising and getting people on the traffic there, getting them cheap deals and not making money, burning a lot of cash, still the stock market quote that particular internet company just going up, and something soon we'll have to a reckoning coming down to this level, back down to a lower level again, because it's just not sustainable. But it could be a couple of years before people just start seeing the bad news in the Main Street. A lot of shops is closing, a lot of commercial rentals are not generating money, so a lot of pension funds will probably lose out quite a bit. And obviously also the U.S. taxes receipt probably go down because a lot of companies just not producing, and a lot of people go bankrupt as well, partial bankruptcy and so forth. But all this is being held up by the U.S. government and government around the world. UK also have the similar effect. Until people start going back to work and government slowly reducing the help, so to speak, financial help, we will probably still see the market folding up. But as we have already coming into April soon, and Joe Biden will be in office like 3 months now, so I think around somewhere end of April, early May or June, we start seeing that 100 days sweet honeymoon dates of Joe Biden's administration in U.S. will probably come to an end, and then people start seeing, we've got a vaccine going on, we've got some extra money in the pocket from the 1.9 trillion bailout from the U.S. government to help the average people on the Main Street, but for some, this might be not enough, or probably for most people, they probably spend on food and pay the gas, electricity bills, kind of thing, just to keep the head afloat. And middle of the year, if the vaccines coming out and shops hopefully start opening, it probably not going to see the ugliness of this pandemic and the fallout from it. Probably later in the year. That's my feeling. But as far as trends were concerned, all trends still continue to move up, so I just got to continue. But I have an eye to say when the trend actually change. I have to be careful and get out. The other thing that obviously on people's mind, we talked a lot, is obviously the last week Alaska meeting between the U.S. and China, and how Chinese is very vocal and push back to whatever the U.S. government had to say to them. And then on Monday, I believe I think the U.S. as well as U.K.'s and some European countries put sanctions on some Chinese officials, and because of the weaker people, oppression of weaker people, or the Muslim minority in China. It just for me then this one in one way is laughable because that's really they what you call the Europeans are really so care about Muslims. Look at what happened in Syria. Look at what happened to Iraq and Afghanistan and stuff. They got a lot of problems over there with Muslim too. Or do they actually sanction anybody over there? Or sanction America actually went into Iraq without United Nations backings and found no mass weapon of destruction or chemical weapons. You know, it's a bit funny why they actually do that to China. Like, I think it's probably the Chinese being very vocal and push back to U.S. and U.S. just tell its allies, okay, let's do it together and annoy China. But on the other hand, China, rather than just very vocal and push back from what I said in my previous podcast from middle to last quarter of last year, push back very hard on all these negative comments to China. This time they actually did something else different. Essentially, just put sanction back on some of those Europeans and American scholars as well as politicians. So they're not allowed to be in China or work with any Chinese company, that kind of thing. And it's the first time China have actually put words into actions. And I think more of that will be coming out. I mean, in this sense, it's not like, not buying this company's stuff or from this country, but it's more a sanction on politicians. And this basically escalate quite a bit, I think. And we just have to wait and see. And all this issue about the forced labor camps and stuff has been actually raised last year. This, I think, is on the cotton side from Uyghur. Basically, there's claim that the Chinese government using forced labor camps, labor to collect the cotton from that area. Especially from my point of view, this was old news. I think that showed up end of last year or something. Chinese did push back on it, but just comments. But then suddenly it shows its head again, and the EU just keep on pushing. And I think. There's also the other thing. I think the Chinese is also not just doing the sanction, but also allowed its internet citizens basically on the internet to basically spread news now. Previously, I think they used to suppress it. They don't want to not allow other foreign company to sell things in China on internet and stuff. And any people like trying to, because of the U.S. sanction, let's say buying less of apples or so for U.S. products, it's been suppressed, I think. But this time around, the Chinese basically allowed the netizens, they call it, internet citizens, to be very vocal and basically say, don't buy Nike, don't buy H&M stuff, don't buy Burberry thing. So there's some sort of pushback, and some of these companies on the stock market has gone down on Friday. But you actually see was actually escalation just continue. And from a hunch, I just think this is very much of a going to be ongoing. It won't be cool down for the next couple of years or anytime soon. I think it just continue to get a lot of escalation. China have to deal with U.S. and U.S. have to deal with China and how to share power and so forth. Remember Boston Tea Party for the U.S. people throwing teas into the sea because the British government keep on making a high demand from U.S. and taxes and so forth, and U.S. at the time have enough, and therefore Boston Tea Party and push back. I think China in this case will also have enough, and basically just push back. And also China, I think, just is borrowing a lead from the U.S. Rather just let U.S. and its ally push China into a corner. And China basically just go to Iran, so as Russia and other country now to try to form together an alliance. It might not necessarily friends, but as like more of necessity, because all the other countries that has been under the sanctions of U.S. government may well be have use China as a focal point to basically link together, and we see the divide between those one that is linked by China and Russia, and those one that's been forced by the sanction into corner to back China and Russia, and then of course the U.S. and the Europeans and UK are on one side, and Australia, Canada as well. And I think overall there's just this new Cold War. I don't know how it's going to pan out, but at the end of the day, is I think the Europeans, like Germany especially, on the market of the of the gas with the Russia's gas deals and things, tell US to back off because US is saying this is bad deal for you guys, bad security for Europeans. But Germany, like any other countries, it's just going to use their own head, own benefit to see which one to calculate which one's benefit better to stand which side, and everybody is going to think for themselves. Each country will think for themselves and see which is more beneficial to them. I think at the end of the day, everybody will be still eyeing on the Chinese market and really want to gain more access into China. So one way or another, they will be a lot more calculative, and maybe working with China a lot more than necessary, so to speak, to gain the Chinese government approval to allow them to go into sell their wares and stuff from their own country. So I think over time, also there's another batch of people that's been forced to a number of countries being forced to choose, like for example Singapore, have a good trading with US as well as US, and it's down in the middle, and it's going to probably forced to either America say you're either with us or against us, and so China would say the same thing to Singapore, and Singaporean people just stand in the middle. Couldn't do anything. They don't want to harm the trade relations, and they don't want to upset US in any way, and so is China. But it just put in a very difficult situation, and of course they have to think of their benefit as well, say which side we will link on. So I think overall there will be quite a lot of issues coming down, and I just my personal hunch, I think inevitably, just like what happens when US become number one, take away the power from Britain. There will be some war with China and US one way or another, and I hope it's just not going to be too bad. Most likely the flashing point will be South China Sea, the area between Singapore, well not really Singapore, like Philippines, Thailand, Vietnam, that water area, Southeast Asia, the water area. And also, of course, Taiwan and Tibet, or whatever other excuses that the U.S. and its ally try to, stem on China for. But I think China is it's very much different from Japan, very much different from Russia, and it's got a lot more people, and it has a lot more resources as well. I think overall there will be quite a quiet transition, but transition there will be, and there's a lot of possibly war on different fronts, financial war, trade wars, and maybe in proxy war, some other things happens around certain areas, and China back one side and US back the other side, that kind of stuff. We'll just have to wait and see. But I think then I don't know how long this will take. So I'm just trying to read history book as well, and it probably take quite a number of years, maybe a decade, to settle all these things down. But that means that there's quite a lot of bumpy road ahead as far as I'm concerned. But as far as trend foreign concerned, who knows if the trend said on the stock market or shares or bonds or forex exchange say go one way, you just follow it. But I just see a lot of upsets go up and down, and of course the other thing done this week is the ship is stuck in the Suez Canal, and it's been there like a week now, and apparently the trade being delayed by this is like a 10 billion per day delay or something, trade between the countries in Europe and Asia kind of thing, because I think 30% of trade route, shipping route goes through the Suez Canal. And we just have to wait and see how things are. Maybe we might not have as much Easter eggs or something. I don't know. Or Easter toys from China or somewhere else. I don't know how that will affect us. We just have to wait and see how it will. But overall, I think it's a very quiet week. And we just have to wait and see what happens. And so it's nothing much to go on for this week. So next is an update on my portfolio. Okay, first off the bat is Apple. Not much different from last week. It's buy short term, medium, long term is still neutral. Amazon, same as last week, buy short term, medium term is neutral, long term is still a sell. On this one's more like a sideways trade, like I said last week as well. Still under the 20 days moving average. Australian dollars, short term is a sell, medium term now changed to sell, and long term is changed to neutral now. So the recent recovery of the US dollar index, it's gone above 92.50 area. I think gone up to like 92.7. It seems to have a bit of effect, obviously, to a foreign exchange. So Australian dollar gone down, and obviously the US dollar strengthening. Next is Brent crude. Short terms a sell, medium terms neutral, long terms a buy. Same thing for WTI crude oil. Short terms a sell, medium is neutral, long terms a buy. So for this week, basically, there's quite a bit of volatility. So seen from last week and forward, crude oil basically just go up and down quite a bit. Down a couple of dollars, up back out a couple of dollars, that kind of thing. So it's getting volatile. I think it's maybe a top is forming. I don't know. We always see this volatility up and down until the market finally is way whether go up or go down. So we just have to bear it. That's how trend following is. Next is DAX from Germany. Short terms a buy, medium terms a buy, long terms a buy. No change from last week. Same thing for Dow Jones, buy across the board, same as last week. Up, short term, medium term, long term. So it's slowly, sort of, for Dow Jones is slowly moving up, but it's continuing moving up nevertheless. FTSE short term is a buy. Neutral is medium term. Long term is a buy, same as last week. No change here. Gold. This is the funny things here. Short term is a sell, medium term is neutral, long term is a sell. However, you would expect when the US dollar index actually gone above 92.5, expect the gold to collapse. Last time, about 3-4 weeks ago, when it gone down, I think about 3 weeks ago, gone down below 1700 to 1670, 1660 area. It didn't do that. It didn't go down to 1700 at all. And it's roaming around 1725 area, and then you can go back up again. So I think gold most likely is bottom is in, unless the US dollar index go like 93, 94. Then might be probably see another time of gold touchings or below 1700. But we just have to wait and see. But the signs are there. So long as gold turn up, then we will have a lower high as well. So around this 1720 area. So we just have to wait and see. We will have keep an eye out for it. Next is Hang Seng. Short term is a sell, medium long term is neutral. No change from last week. Next is Nasdaq. Buy is short term, medium long term still is neutral. So the recovery of Dow Jones a bit, and Nasdaq also seems to not doing too much rather than just short term. Gone up a little bit, that's about it. Nikkei in Japan, short term is a sell, medium term is neutral, long term is a buy. So basically I think short term has changed. Nikkei's got a bit of volatility. So short term from last week buy to this week sell. The rest is the same. Silver, similar to gold again, like I said before, it's lacking gold for either way, either going up or going down. So short term is a sell, medium term is neutral, long term is a neutral, and silver don't seem to be doing too much. It gone below $25 at the point. We just have to wait and see how much further down it will be. Just really have to wait and see. Next is US dollar against Chinese yuan. This is continuing. Basically, the Chinese dollar is weakening, so it's a buy for this cross US dollars against Chinese yuan. Basically, it takes more Chinese dollars to buy US dollars. So yes, US dollars is strengthening. So short term is a buy, medium term is also a buy, and long term is neutral. So this continued recovery of US dollar against Chinese dollar. We just have to wait and see. It might, have already broken above the 50-day moving average. Probably go back up to like the 200 moving average. I wouldn't be surprised, and try it and come back down again. That's around, I think, 6.7, 6.8 area. We just have to wait and see. Next is US dollar against Japanese yen. Short term is a buy, medium term is a buy, long term is a buy. So this means that Japanese yen continue to weaken. With the, like I said earlier, with the US dollar index gone above 92.5. it seems to have gone up, the exchange rate on that one. So it's like 109 or 109.60 or 80 yen per US dollar at the moment. So you just have to wait and see what's happening next. And after that is British pound against Japanese yen, same as US dollar against Japanese yen by across the board. But for British pound against US dollar, though, short term is a sell, medium and long term is neutral. So the British pound seems weakening now, and neutral for medium and long term also show its case. So I think the British pound's weakness is definitely showing up. Next is Bitcoin. Short term, medium and long term still buys. It's buy across the board, but this 60,000 mark seems to have some sort of ceiling. Is not having capability to move up. But just like gold, I would have thought the US dollar index strengthening will cause the Bitcoin to crumble down a bit more, but it didn't. It hovered around 52,000, 55,000 area, but it failed to go above the 60,000. So just have to wait and see. Next is TLT ETF. Short term is a buy now. Medium term is a short, it's a sell. So recent coming down of the yield, basically that means that the price of U.S. Treasury bond 10 years, 30 years have increased, therefore the yield come down. So basically short term it shows up in this TLT ETF. So short term is a buy now. Medium to long term is still a sell though. Next is Tesla. Short term is a sell, medium term is neutral, long term is also neutral. So we just have to wait and see what it goes next. But definitely not same as last year. Won't have a 700% increase, but I think mostly it goes sideways. But we'll see how things might go. Next is Australians index XJO. Short term is a sell, medium term is neutral, long term is a buy. So more or less for the last couple of weeks, I think about a month, just gone sideways, go above the 50 days. Moving average up and down, above or below, up and down, below, and not making much headway. Next is last but not least is Alibaba. Short term is a sell, medium term is neutral, long term is still a sell. So this is one of the Nasdaq constituents, and it's just continue to be sell here. So nothing much on the action side, or not too much action side this week on the share as well. But I just do feel that there's just storms coming out because how China is reacting. It's a lot more vocal, and then U.S. obviously is just going to sit there and let China go do whatever, and already shows his hands now by calling on his allies to do some more sanctions against Chinese government. But yet the escalation continues. China for the first time actually sanctions back I think U.S. on Friday as well, on Thursday, some European politicians and scholars. It's the first time that actually does that. People see just like vocal, very, very angry talk on tune or some video from the foreign ministry or something, but never this time is actually having put a sanction on other people. So let's see how it goes. But obviously the European don't like it, American don't like it, but obviously they used to putting out sanctions against other people, but now this time they're on the receiving end, and we'll just see how it goes. But I think this escalation it just smells of what happened back in Cuba with U.S. Russia put some missile there, and then caused lots of issues in America. And if the spat continue with China and U.S., it's nothing to stop U.S. going to put a couple of missiles in Philippines or maybe in Taiwan. Just joke things up and causes China to really react. And that will be, causing quite a big issue. So rather than having missiles in the back end of U.S., now we got a missile on the back end or on the side of China this time. It can just go blow things up. If it does, then obviously there will be quite a bit of scares, and the market will just go up and down, so quite a lot, quite volatile exchanges. But I hope it never happen. I hope they just stay with words and maybe some sanction and trade war or currency war, but that's about it, hopefully. But if it actually came into war, then it's just history might repeat itself, and therefore there's a lot of trends will happen, and those trends will be very sudden. And trend following, this is the other thing you guys to be careful about. Not just following a trend, but also remember your your safety on what you call the risk management. Make sure that don't bet too much on each of the positions, otherwise if things turn sour, and just like pandemic back in March last year, when things turn sour, you could coordinate across the board on different markets, and all turn, and if you are the other on the wrong side, and you're not nimble enough to get out, you can get burned very quickly. And so something to watch out for. We just have to wait and see how things go over the next couple of weeks. It might be nothing, but well, just this escalations going on with China just worries me, and oil probably and react quite a bit as well. So we just have to wait and see how things might turn out now. So hopefully we'll have a better week next week, and I'll talk to you next week then. Bye for now.